Hello once again, and welcome to the Clear Skies Retirement Podcast with Jay Kirkwood at Secure Financial Management. Online, it's retire210.com. If it's time to talk about your retirement, if you wonder how this whole thing's going to work, and you say, I don't have anybody to talk to this about, and so let's give you somebody to talk to. Jay Kirkwood is here from Secure Financial Management. All right, Jay, so we talk about on the show having a meeting with a financial advisor. One of the things about that meeting is this time of year, we are in the fourth quarter. It is probably very important for you, if you have a financial advisor or you don't, is to have a meeting in the fourth quarter, because that gets into the whole tax situation. There are some windows of opportunity that end on December 31st. So when you sit down with your current clients or new clients, Jay, what is the conversation at this time of year that might be a little different than other times of the year?
Yeah, absolutely. So the big thing is that as we run out to the end of the year, December 31st, that's the last day of whatever that tax year is, right? We want to start looking at, is a Roth conversion, is that something that we want to look at that year? And we're going to be looking at what are the distributions that the client has taken. If we take excess distributions, are we causing a bit of a tax problem? Is it not advantageous for us to bump into that next tax bracket? So there's a little bit more going on with the planning side at the end of the year for sure.
There's a term called tax loss harvesting, which means if you have a really good year in the market, you're going to get taxed with capital gains. But if you have some losses, you can offset those. This has been a pretty good year. Is that going to be a big part of the conversation at this time of the year?
It's definitely something to be aware of, but this is the big thing that I think people should be aware of with that, right? Is the tax loss harvesting side of things. That's only really going to be relevant for non-retirement accounts. Okay? So our non-retirement accounts are not taxed the same as our retirement accounts. So our 401ks, our IRAs, for the most part, when we take a distribution from them, when we do our taxes, it's just counted as ordinary income, and it falls through the income tax bracket rates. And if we sell or we buy inside of that portfolio, that IRA, it makes no difference. If we have a gain, yeah, we can sell it. We're not going to get taxed on that gain, but when we do the distribution, we will get taxed. What we call non-qualified accounts, which are, if you want to think of like the non-retirement accounts, that's where we need to focus on the tax loss harvesting. And it can be a very powerful tool if done correctly.
One of the other things that happens at this time of year, my mom every year goes to her accountant and they figure out her RMDs. She's got her 401k and she has to take a certain amount, and there's a formula that goes along with that. She lets her accountant take care of that. I know that that's a big part of what you do at this time of the year. Does it make sense for some people to do an RMD at a different time of the year and not wait to the end of the year? Should it always be done in the fourth quarter?
The RMD has to be done in the year it needs to be distributed, right? When it comes out, isn't really that relevant. I guess if you want to get technical, you could say, well, if the market's going up, I can leave it in there longer. I can get more of that growth. Yeah, it could be the opposite too, right? The market could go down and you might not get that growth. Where I'd like to go with this is on the RMD side of it, is we pretty frequently have to start conversations with our clients and saying, you're not required to take an RMD right now. You're not 73. I mean, eventually it'll go up to age 75 for the RMDs. You're not at RMD age yet. You're still 4 or 5 years away. However, let me show you in our planning, if we don't do some tax preparation for this and maybe take some, if you want to call it voluntary RMDs, if you want to call it that, if we do some of that now, and we do some tax planning, how that's going to change your situation when the RMD side of it comes. And for some people, and if you're going to have a problem, this is the problem to have. Because if you've got big RMDs, that means you've got a big account there that you have to take the RMDs from, right?
Yeah.
But what we don't want to do is kind of head in the sand, not be looking at this, not being analyzing it. And then we come to 73 or we come to 75 in a few years, and we've got 6-figure RMDs that we have to take. Stacked on top of your Social Security income, stacked on top of your pension income, stacked on top of your IRA distributions. That's painful.
Yeah. And I think people look at it this way. you've got this big 401k and you want to draw money off of that. If, say, for instance, you're 75 years old and your car breaks down and you need a new car at age 75, okay, so you're going to take it out of your 401k. Wouldn't you rather take that out of an account where you didn't have to pay taxes instead of taking that $40,000, you had to take $50,000 out of that account to get that $40,000 car? You're in a more powerful position if it's in a different account and it's already been taxed. And that's really what we're talking about here, isn't it?
Yeah, it really is. It's about, nobody wants to pay taxes, obviously. But I think if we're all having a real conversation about it, it's, if you want to live in a society that has some basic stuff, like there's got to be a tax base, right? There's not really that much of a way around it. But let's manage it in the most efficient way that we can, right? So there's a lot of things out there that you might read online, or a seminar that you get invited to. Oh, come and find out how you can have a tax-free retirement. I don't know what the seminar is about or the details are going into, but I can guarantee you there's some BS going on. Because there is no way you're deferring $500,000 or $1 million or $2 million into these tax deferred accounts that the IRS has not been able to get their paws on, and they're going to let you figure out a way to take it out tax free. Right? That's just, something that we have to deal with. But let's not make it worse than it has to be. Right?
Yep.
Let's get ahead of that.
Well, we know that we need to have an investment strategy for our money. Did you think that you needed a tax strategy in retirement? And you do. This is, I'm going to say a retirement plan isn't a retirement plan without a tax plan. So let's sit down and talk through that. That is what it is to sit down with Jay and the team in the Get Me to Retirement 5-step process. We're going to go through investments for sure, but we're also going to talk about when you start taking money out of that 401k, what does that do for you as far as taxes are concerned? What can we do to help you there as well? It's a great conversation. We'd love to sit down with you and talk through it. Check us out online at retire210.com. That's retire210.com. And if you've enjoyed this podcast and you want to hear more, hit that follow or subscribe button on your favorite podcast platform. And again, thanks for listening to the Clear Skies Retirement Podcast, and we'll see you next time.
Investment advisory services offered through investment advisory representatives at Secure Financial Management, a registered investment advisor. Exposure to ideas and financial vehicles discussed are not designed nor intended to be applicable to any person's individual circumstances. It should not be considered as investment advice, nor does it constitute a recommendation that anyone engage in or refrain from a particular course of action. Past performance is not a guarantee of future results. Investments can fluctuate, and when redeemed may be worth more or less than when originally invested. Financial professionals are not licensed in all 50 states. To find out if Secure Financial Management is licensed in your state, please contact their office. Secure Financial Management is not affiliated with nor endorsed by the Social Security Administration or any other government agency. Annuity guarantees rely solely on the financial strength and claims-paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through Wholesalers Insurance. Jamin J. Kirkwood, Texas Insurance License number 1421850.